everyone, and welcome to our first podcast called Bookkeeping Struggles for Startups and How to Overcome Them. We are super glad you could all be here with us today. I will be your host. My name is Ramsha Jameel, and we're going to address some of the most pressing concerns for startup owners for bookkeeping. Joining us today is Wajiha Danish, the Director of Accounting and Finance at Monily. First of all, Wajiha, thank you so much for taking the time out to give us your valuable input.
Thank you, Ramsha, for inviting me and having me here.
This has been one of the most crucial pain points for several startup owners, and we're so glad that you're here. And we realized that most of them didn't even know how to manage their books or know when and whom to reach out for help. So we're going to start off with the basics. Wajiha, can you tell us why bookkeeping is important for startup owners?
Yes, I'd love to. So in our experience, startup owners often don't have a very clear visibility of their finances and how the money that they have set aside to set up their business it can be best utilized. In order to know what's the best utility for those funds, it is important for them to know what their expenses are going to be, what their cash flow is going to look like. And in order to do that, it is important for them to engage with a professional. It is important for startup owners to have clear, time-specific and measurable financial goals, so that when they start running their operations, they have a yardstick to measure their actual performance against. Most businesses don't succeed because of the cash flow problems they run into in the initial years. Once they start incurring expenses, sometimes they're not able to be on top of them, and money runs out before they can achieve certain level of stability. By having proper bookkeeping done, it shows you a clear picture of where you're spending your money on. It gives you a very clear picture of your cash flows. It gives you a very clear picture of your profitability, which is why I would say that bookkeeping is integral to a startup success.
Great. So now that we know how important bookkeeping is, can you tell us, in your experience, a little bit about why outsourcing bookkeeping is a better idea?
So oftentimes the new startup would not have enough financing queries or enough. They don't need a full-time bookkeeper or a full-time accountant on their payroll, and in those times it helps to have, it is more beneficial to have it outsourced, because then you're only paying for a fraction of the time that you're using. You're not taking the fully loaded cost of that individual. Also, another great benefit that I feel that comes with outsourcing is that given that you've made the right choice about your bookkeeper, they are probably working with other people within the industry or other startups that are in the same stage as you are, and they are able to make valuable connections to able to share their successes and their failures with you. So you don't have to experience those yourself to be able to learn from them. They might be able to tell you, for the XYZ business, or like, and I understand if they can't give out the name of the business, they can say, okay, I've helped this business and they took this certain approach and that really helped them build their customer base or reduce their cost or whatever. So they're able to share with you intel from other experiences that they've had that you can benefit from.
Fair enough. So when would you say is the best time for a startup owner to hire a bookkeeping service? Is there ever too late to get someone on board?
Well, it's never too late, but there's definitely value in having somebody start sooner. The later you have somebody start, the more difficult it is, the more higher the cost is, because a catch-up bookkeeping is more often than not more expensive than regular bookkeeping, just because going back and going through a gazillion transactions, identifying which ones need correction, take a lot more time and effort than to have it done right from the very beginning. So while it's never too late, I definitely think that the sooner you start, the more value you see from it. Also, when you start, it is like as I was mentioning earlier, that unless you have your finger on the pulse, if you don't know how the business is doing, you're not able to make corrective actions. And in order to know how the business is doing, the only way you can do that is if you're able to see a picture of a financial snapshot of your business. And that can only come if you are maintaining your books.
Right. I know that a lot of startup owners would be familiar with the idea of, engaging in an iterative process, like you learn from your failures, trial and error. But speaking like not delaying bookkeeping is one of the major don'ts of financial management. What would you suggest are some of the other don'ts for a startup owner when it comes to bookkeeping or managing their finances?
And one of the biggest don'ts would be don't assume. So sometimes people have a tendency to look at or justify current losses saying, oh, the best is yet to come. And while the best may, that might actually be true and it might be yet to come, having that mentality means that you're sort of like, if you keep on doing that and not seeing, like if those promised revenues are not coming in and you're not looking into why, whether they're real or not, it might be true that you're taking the grave for that business. So I'd say that don't always assume that, this is all cost, the revenue is going to come. So don't assume that your business is doing well. Run projections, run scenarios, do analysis, do the bookkeeping, see how you're doing, because in your head it might look great, but the numbers might not speak the same language. The next thing I'd say is that while it's great to have your bookkeeping done and have your financials prepared, don't forget to review them. So even if it takes you a little bit of time, even if it's a 10-minute, 15-minute meeting, I would say that meet with your accountant or discuss with them your financials over the phone, just so that you know exactly where you stand in your business. Another don't I'd say is don't just mindlessly add expenses. Always evaluate whether adding that expense would also at least have some value and add an equal amount, if not more, of revenues. You should know why you're spending that money, and it shouldn't just be done without much thought. That is what I feel. And don't take too much of a gamble. Like this, risk should always. I personally feel that there should be calculated risk. Definitely, yeah. The higher the risk, the higher the return. But there should be, in my head, calculated risk. There needs to be some rationale for the risk that you're taking.
Fair enough. So just to sum it up, the 5 major don'ts you discussed: don't assume you're doing well, don't forget your monthly reviews, don't add expenses, and don't gamble. Is that correct?
Yes.
Great. So speaking of, think of making a financial model for your startup, could you just explain to us a little bit about what that is and how important it is for startup owners?
So the financial model can be very important for a startup that's raising finances. So if you're looking to raise finances from individuals or corporations or institutes, chances are they want to know how you have been doing and they want to know how you expect the business to do. And in order to show them that picture, in order to tell them what you expect, what you expect from the business, you would need to run some projections, and then support it with with the actuals that you've had so far, and if your forecasted numbers are different than what you've had so far, then you would want to speak to what's going to change, why you feel that the business is now going to do different. So what I'm trying to say is that the financial model is integral to show anybody who's interested in the financial health of the business, to show how you expect the business to do and how it has been doing, so that they can see that you're not just making it up, you have data to back it up.
Okay, fair enough. Can you also share with us like a 5-point checklist that startup owners should have when it comes to just managing their finances, or like even with just bookkeeping, when they're looking for a bookkeeping service? What are some things that they should keep in mind?
So I'd say prepare a budget, because if you don't have a budget, you don't know what your yardstick is that you'd be measuring yourself against. So prepare a budget. Secondly, monitor your actuals against those budgets on a regular basis. So the budget would only be beneficial if you are comparing your actual performance or how you're actually doing against those, and then taking corrective action. Third, I'd say seek professional help. The sooner, the better. And then take a proactive. Fourth, I'd say, is to take a proactive approach. Try to, instead of being like a follower, try to see how you can lead in terms of different arenas of the business. And the fifth thing would be is always to have a plan B. So if your star strategy fails, what are you going to do? Like, how are you going to get out of that sinkhole? So you should have a plan B.
So I want to go back to the point you made about startup owners raising their finances. Could you just share an example or a case study that you have in mind where one of your clients was able to, capture an investor's eye or like get a higher investment, and what role did bookkeeping play in helping them secure that investment?
So yeah, I'd actually be able to share something with you. We do have a client that sells cosmetics online as well as in store. And they've been they did approach us to have they did have a financial model built previously that they wanted us to revisit. There were a few corrections. There were some things that needed to be sorted, and we did a refresh of that model, and then we populated it with actual data. That model was sort of like put together before any operations were done for the business, and with a couple of years in data in, we sort of like populated that model with the actual data, and then in consultation with the client, we were able to put in some assumptions on how they expect their growth to be. And we were able to run projections and show how the business would be doing for the next 3 years. We were also able to show what different different similar companies within the industry were being valued at, so that when they go out, because their intent is and was to raise capital from investors. So they were able to, like with the investors, we did some market research, shared the data within that model on how the other businesses in that industry were being valued at, so that they were able to get a better share price from their investors. They were able to issue shares at a premium, and they've raised some level of financing and continue to raise more.
And that's a really great example, because in the beauty industry, for example, like there's so much competition, and for them to be able to get an edge just by a bookkeeping function, something that someone would overlook, but that's a very small mistake with a really big impact. And I think that's something that's really impressive, right?
Yes, we did do although we do their bookkeeping, we did engage us for but the only way we were able to gather actual data, was because we were doing their bookkeeping. Otherwise, the 2 years or 3 years of data that they had to support would not exist if they were not doing their bookkeeping correctly.
Wow. Well, on that note, thank you, Wajiha, for your time. We've certainly learned a thing or two about how to be better prepared as startup owners and for the obstacles to come. If you'd all like to know more about the bookkeeping essentials or feel like you'd like to sign up for our services, head over to monily.com and schedule your call today.